Our final speaker for this session is the General Manager of Work Aon, a specialist workplace accident claims management and rehabilitation provider. Work Aon is a specialist division of Aon New Zealand. David founded Work Aon in the late 90s, contracting to large employers, life insurance companies to assist them in the rehabilitation of injured clients, helping them back to work or regain independence. Work Aon has managed in excess of 100,000 workplace injury claims in the past decade, and this has been achieved through a network of claim management and case management specialists. So please join with me in welcoming Mr. David Wood.
Thank you. So I'm going to talk briefly about, I suppose, the perspective I'm coming from. The risk's already occurred and it's already been funded by someone. So how do we manage that risk or minimise the risk in terms of managing a claim or helping someone get back to independence? I think one of the interesting things might be to do is say, well, how big is the insurance sector or how many people does it look after? And you may be interested in terms of, I'm saying there, that ACC looks after 120% of all New Zealanders. And you may be thinking, why am I saying 120%? And maybe it's something to do with it looks after people who go and live overseas on a temporary basis, and it also looks after all the tourists who come into New Zealand. So it not only looks after people who have New Zealanders who have accidents in New Zealand, it looks after visitors and it also looks after some of our expats. ACC is certainly a scheme woven into the fabric of the social side of New Zealand in terms of it's seen as a right and entitlement by people that don't even understand they're paying a premium. And they are paying a premium for ACC. Interestingly enough, income protection, a similar sort of insurance that aims to provide income support for people that have an adverse or unforeseen event occur in their life. So only 20% of the population take out income protection, and it's typically more well-to-do individuals who actually perhaps think about what am I going to do if something does happen to me. I need some form of insurance if that adverse event happens. And I understand about 50% of New Zealanders now have health insurance, which is a top-up to take care of what the public health system won't provide on a timely basis. All of these forms of insurance have had the same problem in the last 5 to 10 years. They've had a blowout in claims costs. So the cost of claims coming onto all these forms of insurance is hurting all the primary underwriters in those industries. So what's the industry been doing in response to this growing claims liability? I think from income protection, what they started doing early on was they started risk rating their policies. So if we're going to write a new policy for a new individual, we want to know how old they are, what's their health history like, what are we actually buying into here? So they've taken what we call a risk management approach. If I'm going to offer this insurance to an older, unhealthy person, I'm going to charge a lot for it. The other thing that they've started to do more and more is restrict the duration or the length of benefit that's paid for. So a lot of income protection policies now only offer cover for 2 years post-incapacity. So I can't work anymore, I can go onto my income protection policy, but it only lasts for 24 months and then it stops. So they've limited their liability in terms of a long tail claim. The other thing that the income protection industry did was when they realised a few years ago that they had this terrible long tail claim problem, liability, they started investing in intensive case management. So what can we do to engage with our clients to actively promote them getting well and getting back to independence, getting off claim? In terms of the health insurance industry, what have we seen there? We've basically seen the same thing in terms of risk rating individuals or clients. So how old are you? How healthy are you? We'll set a price based upon those two factors. The other thing that they've done, which seems to be happening more and more now, is limiting treatment costs. So we're not covering those types of drugs, or we're not covering those types of treatments, or we're putting limits on how much we'll spend on those. And of course, Denise has spoken a little bit about ACC. They certainly risk rate their premiums for employers, but for all of us who are salary and wage earners sitting in the room here, we all pay the same premium rate. So we're not risk rated as individuals. But ACC has probably led the way in terms of case management of claims, in terms of having a big liability out there. How do they actively engage and interface with their clients? I thought it was interesting to look at the incentives because once you're on claim, depending on how much you're paid, it can determine your incentive to remain on claim. And there's some interesting minimums and maximums there for the different types of claims that you can go on. Certainly, our experiences, particularly with ACC, someone who's closer to the maximum, it takes a lot more encouraging to move them off claim and back into independence than perhaps someone on the minimum.